You might have heard the conversation that Tesla stock is either undervalued or overvalued. In this video, we are going to talk about whether Tesla is undervalued or overvalued right now, possible simple ways to look at where it stands, and at the end, my perspective if this is the right time to buy, sell, or wait. Hi, my name is Sunny, and I make videos that affect a common man financially. If you're new to this channel, please subscribe to it alongside smashing that like button, as that will help me with the YouTube algorithm, which will be highly appreciated. If you talk to a common man on the street, you will get a feeling everybody is crazy about Tesla car these days. On the flip side, if you talk to someone who knows a little bit about stocks, he will let you know that if there is one stock you should have in your portfolio, it has to be Tesla. Therefore, how come two very different and opposite answers from the investing public? And the simple answer is knowledge. Stock investing is all about predicting the future price of a company today. And don't get me wrong, you don't need to be an astrologer for that. In little more technical terms, you are trying to find the future value of a company based on their business prospects and financials, then discount that to today's stock price so that if you invest now and the company grows, hopefully you will make some money in the stock appreciation in the future. That is exactly what real estate investors do. They buy property to get some appreciation in the future when it grows up in value. Likewise, stocks are no exception. Recently, only a few investments have generated such a public debate about its valuations. Some think they are insanely overpriced in a bubble territory that can pop anytime, while others consider Tesla as a technology disruptor who is being underestimated, so could be the buy of a lifetime. But it all changed when someone with an eye for disruptive technology alongside focus on the growth came on the scene. This was a fund manager named Cathie Wood who had picked this trend very early on, and frankly, people were making fun of her on national television. Her logic was around Wright's law, which says that for every cumulative doubling in the units produced, the cost associated with manufacturing goes down at a consistent percentage rate. In line with this law, cost of battery systems, which is the most expensive component of an EV, has gone down by almost 28% for every cumulative doubling of the production. There comes a moment when cost of an EV and its ownership cost over its life cycle is at par with a comparable internal combustion engine. Who would have thought even a few years ago it could have been possible? But both Cathie as well as Tesla were right. Just imagine when Tesla would make 10 or 20 million cars every year, then according to Wright's law, the cost of an EV would be much lower than a comparable ICE vehicle, and when you add cost of ownership on top of it, it is like cherry on the cake. Tesla has a first mover advantage as they are miles ahead of the competition. Now they have started making front as well as rear single castings, battery in center as a structure, their new in-house developed and made battery cells, having plants all over major continents around the world, and on their way to solve the full self-driving technology, and at the end, Elon Musk's foresight along with his risk-taking ability. Do you think legacy automakers can catch up to Tesla? In reality, they are just making budgetary plans of spending $30-40 billion on EV development in the next 5 to 10 years. Imagine the wide gap when most automakers are planning budgets. In the meanwhile, Tesla is building gigafactories that are churning out Tesla cars. Hope you get the idea. If you look at a $1 trillion company growing at more than 50% for the next foreseeable future, having a clear, distinct advantage both in product as well as technology, what do you think it can do to its stock price? Surely it will go up. Now, some experts are of the opinion they are at their initial stage of S-curve growth. But in my limited wisdom for a little patient long-term investor, as its revenue grows at an exponential rate for the next 5 to 10 years, it is inevitable the stock price will follow the trend. But that is me. I might be wrong. Do your own due diligence before investing. Since I'm not a financial advisor, please consult one before investing based on your personal financial situation. This is my take on the topic. Overvalued Tesla. Really? If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.